Sir Mervyn King, Governor of the Bank of England, has today warned that UK banks may not have enough capital against future financial market disasters. On the phone with me now to discuss the BoE's Financial Stability Report released today is Peter Dixon of Commerzbank. Hi Peter. The BoE Governor cites fines for conduct issues as a driver for concerns over capitalisation in today's report. It's thought that the £13 billion currently set aside is likely to rise. Would you agree? And in your opinion, are these fines really the key factor?
Well, I certainly think that given the regulatory environment in the UK at the moment, it's highly likely that banks will be forced to set aside still more capital against possible future fines. So yes, to that extent, I do agree. But I think there are much bigger issues for banks to worry about. I mean, one of the things which came out of the report, I think, was that the Bank of England is still concerned that many banks have a lot of assets on the balance sheet which are marked way above their current market value. And I think the Bank of England is particularly concerned that we get a much more realistic assessment of banks' balance sheets in order that we can cleanse those balance sheets and move on from here. Because I think until such times as that process takes place, we're going to be trapped in an environment of relatively sluggish bank lending, which I think is one of the key contributory factors behind the current slow pace of growth in the UK.
There were several attempts during the press conference today to address the elephant in the room, namely Paul Tucker's snub as Governor of the BoE. Many are now speculating whether Mr Tucker will stay on in his role as Deputy Governor. What are your thoughts on this?
I think Mr Tucker is fairly likely to leave as soon as is practically possible. Quite what he'll do, I'm not sure, but I'm sure there will be no shortage of offers from those in the financial sector who value his long years of experience and the many contacts he's made up during his time working for the central bank. But I'd rather think his position has been made untenable by the appointment of an external candidate, particularly since Mr Tucker was indeed the bookmakers' favourite, right up until the announcement was made.
And Peter, what is your opinion on Mark Carney's appointment as Governor of the Bank of England?
Rather mixed. I mean, I think I view the laudatory comments that came out of the press and indeed many parts of the financial community with a certain degree of reservation, shall we say, because I think Mr Carney obviously is a very highly qualified candidate. He comes in with all the right credentials to take on both management of the economy and indeed overseeing the UK or the Bank of England's oversight of the UK financial architecture. But I think to some extent we're being we're expecting a bit too much of him, because after all, he has only been managing the Bank of Canada since 2008, and effectively been overseeing an architecture, a financial architecture, which was put in place some time before he took over. So, in that sense, Mr. Carney is clearly not the architect of Canada's success, although he has been a very good steward of the situation in Canada over the last 4 years. I think time will tell whether Mr. Carney is a success or not. So I don't think it's worth jumping the gun at this stage. I think we have to judge him on his track record in the UK. And to the extent that to anybody who takes over these kind of jobs is going to be subject to the prevailing set of circumstances, Mr. Carney can only hope that things go his way and that he will turn out to have been in the right place at the right time, because obviously if things were to go wrong, perhaps in the Eurozone, for example, he may wish he were somewhere else.
Lending to individuals data for October has fallen below forecasts, once again inciting calls for greater transparency regarding banking loans. This also coincides with comments that the funding for lending scheme is backfiring as lenders continue to tighten terms for small businesses. How serious is this issue?
Well, I think it's something which really needs to be addressed fairly quickly, but I think the authorities have generally taken the view that the funding for lending scheme is going to take a bit of time before we can assess its worth, and I think that is absolutely fair comment, of course. But the problem with it is that it is a scheme which really only operates on the supply side of the credit balance. I think it's been said before that you can lead a horse to water, but you can't make it drink. And I think that's a pretty accurate description of the situation facing the Bank of England at the moment. It can increase the supply of credit, but it can't actually do anything to ensure that households or indeed firms take up additional demand. So to that extent, I think the FLS is only a partial solution to the problems. But it's very difficult to know exactly what can be done. I think we have to accept that here in the UK, over the course of the next few years, the deleveraging process, which began in 2008, will continue. And I think as a consequence, once we get our head around that, maybe we can accept the fact that the 1 to 2% growth that we're likely to get over the next 4 or 5 years is probably the best that we can achieve under the circumstances.
Peter, thanks for speaking with me. That's all for now, but join the TV team tomorrow for another round of exclusive interviews. Goodbye.